So now let us start with part 2 of essay 315 that deals with internal control. So we understood in part 1 that the auditor tries to understand the entity and its environment and also its internal control. So now today let us discuss completely about internal control. So internal control is the process that is designed, implemented and maintained by TCWG management and other personnel to mainly obtain reasonable assurance. So basically, it is a process that is designed, implemented, and also maintained by whom? TCWG management and other personnel to obtain reasonable assurance with regard to reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets, and compliance with law and regulations. So basically, it is a process to obtain reasonable assurance regarding these areas. So control refers to any aspect or component of internal control. So basically there are 5 components of internal control, and this internal control or control refers to any aspect or component of these internal control. So internal control varies with entity's size and complexity. So depending upon the size of the entity, depending upon the complexity of the entity, the internal control might vary. For example, a small retail store might rely on single owner or manager to oversee all operations and transactions, while a large multinational corporation will have more complex structure with multiple departments and layers of management. So depending upon the size and complexity of the entity, the internal control will vary. So a small business might use a simple cash register control, or whereas a large corporation will have sophisticated systems for managing inventory, accounts payable and accounts receivable. Okay, so that's how internal control will vary with different entities, sizes and complexity. And what is the objective of internal control? So you can remember the objective of internal control with respect to transactions and assets. So first objective is that whether the transactions are executed as per management authorization or not. So management will basically authorize a few transactions. So those transactions cannot be performed without the management's authorizations. The authorization can be either general or specific. So whether the objective of the internal control is to ensure whether these transactions are executed as per management authorization or not. Second objective, whether the transactions are of correct amount, are they recorded in the appropriate account, and do they pertain to the correct accounting period, to the right accounting period. So proper recording the correct amount, the appropriate account and in the right accounting period, that is proper recording, will help in the preparation and presentation of financial statements as per applicable financial reporting framework. It will help in compliance with law and regulation, and it will help with accountability for assets. So internal control second objective is to record the transactions properly. The third objective is to safeguard the assets from unauthorized access or use. So effective controls and effective control environment will help the assets. It will safeguard the assets from unauthorized access. So any unauthorized employee, any unauthorized person cannot access those assets or use those assets. The fourth one is asset reconciliation. So it will make sure that the recorded assets, when they are compared with existing assets, are reasonable intervals. Are the recorded assets compared with the existing assets at reasonable intervals? And if there is any discrepancy between the recorded assets and the existing assets, then how are those discrepancies resolved? So these are the 4 objectives of internal control. The first 2 objectives deal with transactions and the second 2 deals with assets. So you can remember it like T, T, A, A. So this whole chapter has a lot of questions. Each question can be about some 3 to 4 marks, and we don't know from where it can be tested. So each and every point is very important. Next is benefits of internal control. What are the benefits of understanding internal control? The first benefit is that when you understand the internal control, you will be able to identify the potential misstatements. So if there is risk of overstatement or understatement in the accounts receivable, when you understand the internal control, you'll be able to identify those potential misstatements. You'll be able to identify the factors which affect the risk of mental misstatement. For example, if there is segregation of duty, then you'll be able to identify the risk of employee fraud. Like if the duties have been properly segregated to this and this employee, then you will exactly be able to identify which employee did the fraud. But if there is no segregation of duty, then you'll not be able to detect the employee fraud. And segregation of duty is one of the components of one of the areas of aspects of internal control. So basically, when you devise effective internal controls, you can identify the factors affecting risk of metal misstatement. Next benefit is designing nature, extent and timing of further audit procedures. So we all know that first we start with risk assessment procedure, then we go ahead and do the test of controls, and then we do substantive analytical procedures, and substantive analytical procedures we have further audit procedures. So basically, when you understand the internal control properly, then you'll be able to design nature, extent and timing of further audit procedures also properly. So these are the three benefits of understanding internal control. Next are the limitations of internal control. So internal control can only provide reasonable assurance. It cannot provide absolute assurance, and entire audit can never provide absolute assurance. We only give reasonable assurance. So internal control can provide only reasonable assurance because there are certain inherent limitations of internal control. The first limitation is human judgment in decision making. So wherever decision making is there human judgment is involved, and human judgment cannot always be right. Sometimes it can be wrong. For example, if you classify the amount wrong, if you classify that particular transaction as the wrong head, or if you record the wrong amount, then in that case your internal control has a few disadvantages, a few limitations, and one such limitation is human judgment. The second one is lack of understanding the purpose. So in lack of understanding the purpose, the main idea over here is that there is specific information that is produced for the purpose of internal control, and the user of that information, he is not effectively utilizing that information because that individual, that user who is responsible for reviewing the information, he actually does not understand its purpose and he takes inappropriate action because of it. So basically, if you take a look at exception report will mainly highlight unusual transactions. Exception report is a type of summary report that highlights events or data points that fall outside of a predefined normal range. So basically, exception report will highlight unusual transactions. Now, whatever information is provided for this in the exception report, it is per the purpose of internal control. Now, where the individual does not effectively utilize this information, and that individual is responsible for reviewing the information, he is not effectively utilizing it because he does not understand its purpose, and thus he takes inappropriate action. So there is basically lack of understanding of the purpose. That is a second limitation. This we have already discussed. Next, judgment by management. So management will decide what type of control and how much control is required, right? So whatever types of control needs to be exercised, that the management will decide. So while deciding what type of control to exercise and how much control is required, management will also consider the cost of control. So just say when controls are implemented, things become efficient. But when you implement too much amount of controls, your cost will increase and excess control will also hinder your performance. So what is the cost of control? The management will decide, and will also keep in mind that excess control hinders performance. Next, limitations in case of small entities. So in small entities, what happens is that there is no need for a lot of internal control. So in small entities, there will be limited staff, and hence the segregation of duty becomes difficult. But in small entities, there is close involvement of owner. So when there is close involvement of owner, there is better control. So basically, owner has better oversight on the employees, and this can mitigate the risk due to lack of segregation of duties. But on the other hand, the owner or manager may be able to override controls because the system of internal control is less structured. Sometimes what happens is that he will override the controls because the system of internal control is less structured in the small entity. So the auditor should especially consider this point while identifying and assessing the risk of metal misstatement. So this is a limitation in case of small entities. So small entities के case में there are a few benefits. That is, this is the benefit, but there is also a limitation. Next, components of internal control. So there are basically 5 components of internal control. First one is control activities, then risk assessment process, then information system, then monitoring of controls, and control environment. So dividing the internal control. So why is the internal control divided into 5 components? Because dividing the internal control will help the auditor. It will provide a framework to the auditor to understand internal control in a better way. When something is divided in parts, you will be able to understand it and process that information better. So that's the reason internal control is divided into 5 components because it will ultimately enable the auditor to understand it better. So framework is nothing but basically this talks about the structure or the skeleton of internal control. So there are basically 5 parts: control activities, risk assessment process, information system, monitoring of controls, and control environment. First, let us start with control environment. So in control environment, the auditor obtains understanding. So here the auditor will basically obtain understanding of the control environment, and he will evaluate whether the management has created effective work culture. It has instilled the principle of honesty and ethical principles among its employees. And he will also evaluate whether the control environment supports and enhances other internal control components. So whatever other internal control components are there, whether the control environment is supporting these other internal control components or not. Next important thing is control environment includes governance and management. So it basically includes the governance functions performed by the management and also the management. And governance means those charged with governance. It basically includes the governance and management and attitudes and awareness and actions of TCWG. So what is the attitude of TCWG towards the company? How much aware is TCWG about the actions of the management or whatever is happening in the company? How much aware is the TCWG of it? So next we have elements of control environment. So there are basically approximately 7 elements of control environment. Let us first broadly understand the elements over here, and then let us discuss each point. So basically we know that every organization has TCWG, management, and employees. So here in elements of control environment, there are a few particular keywords that you need to remember, and this flowchart, this kind of diagram will help you. So first and foremost, TCWG management employee. We will ensure whether employees are having integrity, whether the employees are competent or not, and whether they're following ethical principles or not. Now management has responsibility towards the employees. Okay, so management has responsibility towards the employees, and what is the management's attitude towards risk management, towards financial reporting, and towards the personnel. Towards the personnel means what is the management attitude towards the employees, whether the employees can reach the management properly or not. Next is whether TCWG is giving authority to management or not, whether TCWG is giving authority to the management to take care of certain things, and whether TCWG is participating in the decisions, in the activities of the company or not. So here we have covered 3 things. First and foremost, employees, whether they are having integrity, whether they're competent, whether they are following ethical principles, whether management has responsibility towards the employees, whether what is the management's attitude towards risk management, towards financial reporting, and towards the personnel, whether TCWG is participating and delegating authority to management or not. One more important thing is that human resource department is mainly responsible for recruiting, orientation, training, and evaluation of employees. So it basically takes people from outside organization for job opportunities. It gives job opportunities to them. It takes employees, it recruits them first, then it gives orientation courses to them, then it trains them, then it also evaluates them, and the human resource department ultimately send them to the organization. So what are the policies and practices of the human resource department? And this is the entire organizational structure. Now let us read each point. First, elements of control environment. The first point is communication and enforcement of integrity and ethical values. So whether the control environment is communicating and enforcing integrity and ethical values in its employees. It is essential for control design, administrative, and monitoring. So the first keyword is integrity and ethics. Second, whether there is commitment to competence, whether the employees are committed to competence, consideration of necessary competence for jobs, translating to required skills and knowledge, participation by those charged with governance. So attributes of TCWG, that has independence from management, experience and status, active involvement and thorough scrutiny, appropriate actions, raising and pursuing difficult questions. So there are basically 4 attributes of TCWG. The first one is independence from management. So TCWG is independent from management, right? Next, TCWG has experience and status. It is a top level authority that is responsible for oversight of financial reporting process. So TCWG is independent from management. It has experience and status, whether it is actively involving and doing thorough scrutiny, appropriate actions, raising and pursuing difficult questions. So these are the 4 attributes of TCWG. Next, management philosophy, operating style. So management philosophy, operating style, we have 3 points: risk management, financial reporting, and attitude towards information processing, accounting functions, and personal. So basically, you can remember it, the word attitude towards risk management, financial reporting, and personal. Next, the entire organizational structure. So the framework for planning, executing, controlling, and reviewing activities. Example, hierarchical structure of organization can facilitate efficient project management and operational control. This is just an example for you to remember the organizational structure. Next, assignment of authority and responsibility. So assignment of authority and responsibility. Next, human resource policies and procedures. So human resource development will basically recruit, orient, train, evaluate, and other HR functions. So basically, with this flowchart, you can remember most of the points. The next important point is satisfactory control environment is not an absolute deterrent to fraud. See, having a good satisfactory control environment is a positive factor because it will help in assessment of risk of middle misstatement, and it reduces the risk of fraud a little bit to an acceptably low level. But it is not an absolute deterrent to fraud. It means that just because an entity has satisfactory control environment, it is not going to kill fraud. Okay, so it is not going to kill fraud. It is not going to end fraud. Okay, fraud will be there even if you have satisfactory control environment. Even if you don't notice it, some or the other type of fraud will be there. So conversely, there are deficiencies in control environment. So basically, every control environment, whether it is very satisfactory operating, also there are deficiencies in the control environment which you shouldn't undermine. Okay, so the deficiencies in control environment will ultimately undermine the effectiveness of internal control, specifically for fraud. So the control environment also influences the nature and extent of auditors' further audit procedures. So basically, you need to understand one thing, that just because you have a satisfactory control environment, it doesn't mean that it is going to end fraud. It is not going to be an absolute deterrent to fraud. So the deficiencies in control environment, they undermine the effectiveness of internal control, specifically for fraud. So control environment also significantly influences the nature, extent, and timing of auditors' further audit procedures. So control environment by itself, it does not prevent, detect, or correct middle misstatement. It may, however, influence auditors' evaluation of effectiveness of other controls, and thereby the auditor's assessment of risk of middle misstatement. Next, we have risk assessment process. So what is the entity's risk assessment process? So you need to first understand the basic difference between risk assessment process and risk assessment procedures. Risk assessment process is conducted by management. It is a process that the management follows to assess the risk. But risk assessment procedures are conducted by auditor, and both are not same. So risk assessment process and risk assessment procedures are completely different. Process is conducted by management and it's a part of internal control system, that is internal control, and risk assessment procedures are used to evaluate the risk of middle misstatement. It is conducted by auditor. They are used to identify and assess the risk of middle misstatement. It is conducted by auditor. So basically, this risk assessment process consists of 4 steps. First, the management will identify the business risk. So what is business risk of the management? We have already discussed in the previous part, that is in essay 315, understanding the entity and its environment. So first, the entity will identify its business risk that is relevant for financial reporting. Second, it will estimate the significance of that risk. So once it has identified the business risk, it will estimate the significance of that risk, and then it will assess the likelihood of occurrence. And ultimately, the entity will decide action to address those risks. So entity's risk assessment process forms the basis for risk to be managed. So it is basically the process that will form the basis for what all risk the entity needs to manage. And if the risk assessment process is appropriate, it will assess the auditor in identifying risk of middle misstatement. Okay, so basically a good risk assessment process will ultimately assess the auditor in identifying the risk of middle misstatement. So whether the entity's risk assessment process is appropriate to the circumstances is a matter of judgment. So ultimately, the risk assessment process appropriate or not, also auditor has to judge. Okay, so always remember that the risk assessment process is done by management. Auditor just obtained understanding of risk assessment process and checks if entity's risk assessment process is good. If the entity's risk assessment process is good, then the internal control is good, then it means that the risk of middle misstatement will be low. It doesn't mean that the risk of middle misstatement doesn't exist at all. It will be low because the risk assessment process is good. Next, we have information system. So in information system, we have if you can take the example of Tally, Zoho. So basically, how the entity is trying to maintain its accounts in a digital way. So information system is also again the responsibility of management. So this entire internal control part, the 5 components are ultimately responsibility of management only. So the auditor obtains understanding of information system of management that relates to business processes and that is relevant for financial reporting. Auditor will obtain understanding of information system of management, including the following. So what all are included in this? The first one is transactions. So the classes of transactions that are significant to the financial statements. So an entity incurs countless amount of transactions. So what are the class of transactions which are significant to the financial statements that the auditor will obtain understanding regarding those kind of transactions. Next, the procedures through which transactions are initiated, recorded, processed, and reported. So what are the procedures through which the transactions are initiated, recorded, processed, and reported? IRPR. Okay. Next, understanding the accounting records that are used to initiate. First, the class of transactions which are ultimately very, very significant to the financial statements. The procedures through which the transactions are initiated, recorded, and processed. The accounting records that are used to initiate, record, process, and report the transactions. And ultimately, how the system is capturing significant non-transactional events. So there might be non-transactional events and conditions as well. How efficiently is the system managing those kind of non-transactional events and conditions? How efficiently the system is capturing those kind of non-transactional events and conditions? For example, assets are being revalued. So this is not a transaction that the company is making. But still, non-transactional events, how the system is trying to capture those is also very, very important. Next, financial reporting process. So the process that is used to prepare financial statements, including important estimates and disclosures. So when we prepare financial statements, what are the important estimates and disclosures that are used to prepare financial statements? So that is the financial reporting process. Next, journal entry controls. So understand the controls over journal entries, especially those for unusual and non-recurring transactions. So if there is an unusual transaction, if there's a non-recurring transaction, how are the journal entries being passed in the situation? So you specifically have to check, are journal entries correct or not? You have to obtain understanding of that. So basically, in information system, the auditor has to obtain understanding of information system of management, including these points, 5 points. What are the 5 points? Transactions, procedures, accounting records, whether the system is capturing non-transactional events and conditions, financial reporting process, and journal entry controls. Next, we have control activities. So control activities include policies and procedures ensuring management directives are implemented. So ultimately, management will give directions to its employees and different personnel working under the company. So are management's directions being followed or not? So control activities are the policies and procedures for ensuring that management's directives are implemented. So examples of control activities are segregation of duties, authorization of any transaction by senior, like management authorization in respect of few general or specific transactions. So auditor tries to obtain understanding of the control activities which are relevant to audit for identifying and assessing risk of middle misstatement. So basically, if the control activity is good, the control activities are very nice. Whatever management directives are there, they're followed by the employees. It means that the control activities are good. It means that policies and procedures are implemented to ensure that management's directions are followed by the employees. So control activities are good. It means that the risk of middle misstatement is low, and ultimately the nature and extent of substantive procedures पर impact पड़ेगा. Basically, if the risk of middlement is low, the auditor will perform lesser substantive analytical procedures. So basically, it will impact the substantive analytical procedures as well. So control activities that are relevant for audit activities. So basically, they are giving examples of the control activities that are very, very relevant for audit. So basically, what are those activities? Activities relating to significant risk. So significant risk areas, the areas which are having significant risk, there you should put more control activities. There you should implement more policies and procedures. Okay, the risk for which substantive procedures alone will not provide sufficient or appropriate audit evidence. And those kind of activities which are considered relevant as per professional judgment of the auditor. So basically, here you have to remember 3 activities. So regarding 3 activities, control activities are relevant for audit, especially regarding 3 activities. So what are those 3 activities? Activities relating to significant risk, activities with activities related to risk for which substantive procedures alone will not provide sufficient appropriate audit evidence, and activities, especially those activities which are considered relevant as per professional judgment of the auditor. So regarding these 3, control activities are very, very relevant. Okay. Next, we have monitoring of control. So auditor will obtain understanding of how the entity monitors internal control over financial reporting. How is the internal control system is there, but how is the entity monitoring that internal control system? So for this, the auditor will assess the effectiveness of internal control performance over time and taking remedial action. So first, he will assess what is the effectiveness of internal control performance over time. So he will not assess at one point. He will assess the effectiveness of internal control performance over time and taking remedial actions, which is accomplished through ongoing activities, separate evaluation, and combination of both. So the effectiveness of internal control performance over time is accomplished through ongoing activities. So whatever activities are there, ongoing activities, then separate evaluation of each activity, then combination of both. So management may use external feedback such as customer complaints or regulator comments for monitoring controls. So basically, what is the meaning of monitoring controls? Monitoring controls means that the management will check whether the internal control system is properly functioning or not. For that, it has to monitor the controls. Okay, it has to monitor controls. For which, what will the management do? The management will obtain external feedback such as customer complaints or regulator comments, and depending upon these feedback, it will more effectively monitor the controls. So in small entities, close management involvement in operations often helps in identifying and correcting control issues. So in small entities, what happens? The close management involvement is only sufficient to identify and correct control issues. Okay, so we have completed with monitoring of control. So basically, what are the components of internal control? So we have 5 components. We started off with control environment, then we did risk assessment process, then we did information systems, then we did control activities and monitoring of control. So these are the 5 components of internal control. Basically, these 5 components of internal control mean there is one component that is monitoring of control. So basically, it is sort of monitoring and checking whether entire internal control is functioning properly or not. Next, we have are all controls relevant to audit. See, an entity will implement various controls, but the auditor will not use all the controls. He will only use the controls which are relevant for his audit. So basically, while using the controls, the auditor will exercise his judgment. And what are the factors which will help the auditor in exercise his judgment for using the controls? So there are basically these factors. The first factor is materiality. So he will use the controls which are relevant in order to set the materiality level. Next, risk, the size and nature and complexity of the entity, the legal and regulatory requirements, the circumstances and components, the nature and complexity of the systems which individually or in combination prevent, detect or correct material misstatements. Next, control over accuracy of information will be relevant if such information is to be used in designing further audit procedure. So the auditor will use controls over accuracy of information if that information will be used by the auditor in order to design further audit procedures. Next, for example, the auditor applying test of details to revenue will need information on sales price and sales volume information. So basically, if he has applying test of details on revenue, then he'll need information on this, and this information needs to be accurate. So in those cases, he will use accuracy of information related controls. Okay, so control accuracy of information control, they will be used only if the auditor intends to use it for further audit procedures like sales volume, sales price. Next, controls related to objectives. So he will use it only in the case of statutory requirements. Next, safeguarding of assets. So workplace safety controls, what will be there for the employees, they are not relevant for audit, so the auditor will not use them. But login ID for cash disbursement is relevant. It is relevant for financial reporting, so I will use that control. Next, regular inventory count relevance, effective spike scheduling. These are all the controls which are not relevant for audit. Preventing use of excess material, maintenance log of machine, ensuring compliance with tax laws, ensuring compliance with data protection. So these are all the examples of the controls which are not relevant for audit. Next, nature and extent of understanding relevant controls. So what is included in risk assessment procedures to obtain all evidence about design and implementation of relevant controls? So if the controls are manual, then in that case, evidence is required across different periods. Because it is manual, you have to keep obtaining evidence. But if the controls are automated, then the evidence is required only once, because of consistency of ID processing and related ID controls must be tested. Next, we have evaluation of internal control by auditor. So the auditor obtains reasonable assurance whether the accounting system is adequate or not. So what does the auditor need to do? He needs to obtain reasonable assurance, and the internal control will contribute to such assurance. So basically, The examination of internal control by the auditor is an indispensable part of audit. The auditor has to examine the internal control. So he has to evaluate the internal control. So basically, what are the advantages of evaluating the internal control? So when the auditor evaluates internal control, it will enable the auditor to ascertain whether the internal control system is adequate or not, whether it is able to prevent, detect and correct misstatements or not, whether it properly safeguards the assets or not, whether internal control system is correctly recording the transactions, the reports and certificates provided by management are reliable or not. So basically, it will enable the auditor to ascertain whether these things are, the internal control system is properly functioning or not. So the next thing is that whether internal control is weak or excessive in a particular area. Next, effective internal audit department is in operation, and suggestions can be given by management to improve the internal control, and extensive substantive procedures are required. Audit procedure techniques need to be changed from plan 1. So basically, when the auditor will evaluate the internal control, it will enable the auditor to understand whether the internal control system is adequate, it is prevent, detecting and correcting the frauds, it is safeguarding the assets, it is recording the transactions or not, whether the reports and certificates which are provided by management are reliable or not, whether internal control is weak or excessive in a particular area, whether internal audit department is functioning effectively or not. The suggestions can be given by management to improve internal control, and ultimately the auditor needs to do more extensive substantive procedures, and audit procedure techniques need to be changed from plan 1. So auditor can formulate his audit program, deciding appropriate procedures to be applied only after satisfactory understanding of internal control system and their actual operation. So basically, he can design his audit program only after satisfactory understanding of internal control. So basically, whatever understanding he has obtained on internal control system, it should satisfy him. Only then he can formulate his audit program. So this will also help him in communicating the weakness of internal control to the management along with measures for improvement. So next we have evaluation of internal control, where we have approximately 4 methods. So the first method is narrative records. So narrative record is a complete exhaustive description of the internal control system. So basically, what the auditor has to do, he has to evaluate the internal control, and he has to communicate the weakness of internal control to management along with the measures for improvement. So how will we evaluate? The first and foremost method is narrative records. So narrative records means the auditor will give complete exhaustive description of internal control system, and this is developed by the auditor after testing and observation. So this is recommended. This method is recommended where no formal internal control is there or it is a small business. But what is the main disadvantage of this method? It is difficult to understand the system as a whole. So you cannot understand the system as a whole, and you cannot identify weakness in the system and incorporate changes thereon. So these are the 3 disadvantages of narrative records. The next method is checklist. So checklist is a series of instructions or questions which the auditing staff will follow or answer. So basically, it's a series of questions or instructions which the auditing staff will follow or answer. So they mark initials after completion. So basically, it's a checklist. They mark after completion: yes, no, not applicable. Okay. So instructions are framed as per internal control system, and the computer checklist is studied by the senior. So whatever computer checklist is there, it is studied by the senior to ascertain whether the existence of internal control and whether internal control is implemented properly or not. So this is the second method. The third method that we have is internal control questionnaire. So internal control questionnaire is a comprehensive series of questions, and it collects information about existence, operation and efficiency of the internal control. So there are 2 advantages of internal control questionnaire. The first one is there are chances of oversight or omission of review of any aspect of internal control is very less. The chances of oversight or omission of review of any aspect of internal control is less, and it will take less time. The questions are framed in a manner that yes will say satisfactory. If the answer is yes, then it is satisfactory, and no suggests weakness, and a no answer can be further explained. So basically, yes means satisfactory, no suggests weakness, and no can be further explained. Not applicable is used for not relevant questions. So wherever there are unrelevant questions, not applicable is used. So basically, the auditors will send the questionnaire to the client, and any inconsistencies is addressed through discussion. He will send the questionnaire to the client. If there are any inconsistencies, they will be addressed through discussion. And finally, the report on deficiency and improvement recommendation will be sent to the entity, the management. Next, the fourth method that we have is flowchart. So flowchart is basically a graphic presentation of each part of internal control. So every part of internal control will be graphically presented, and it is the most concise way of review. So it is concise to the point, and visually looking at the flowchart, they will be able to understand the each component or part of internal control very well. So it minimizes narrative explanation. Instead of giving narrative explanation, the flowchart will minimize that narrative explanation because it will be in the form of diagrammatic graphic presentation. It will give bird's eye view, and it will help to understand and evaluate internal control and identify the deficiencies. So this was about flowchart. So we have completed internal control. Now there are two small questions. The first one is, maintenance of internal control system is a responsibility of the statutory auditor? No, the maintenance of internal control system is a responsibility of the management. So this is an incorrect statement. And this is the answer. So management is responsible for maintaining adequate accounting system and incorporating various internal controls. Next, who is responsible for maintaining effective internal financial controls? So we have already discussed internal financial controls in SA 610, the internal audit department part. So you can refer that video for internal financial controls. So who is responsible for it? Management is responsible for internal financial controls. Internal financial controls are basically policies and procedures which are implemented by management regarding the control of a few aspects. Okay, so this was about the internal financial controls. So we have completed with internal control part of SA 315.